Hello and welcome to the Weekend Investing Daily Bite of 17th of October and a day that we were dreading for the last few sessions for the right shoulder for the nifty head and shoulders pattern. We will talk about it. Today in the discussion, we will have this brand new asset class that SEBI has recommended. What is this all about? What kind of strategies will this have? And what are the plus and minuses of this brand new asset class? We'll discuss this. First, read a disclaimer. This is very important. Um, in terms of the markets, markets had been sort of, dead in the track for the last 5, 6 sessions. And today, you can say the resumption of downtrend seems to have started, although we are exactly at this you can say the Lakshman Rekha of this head and shoulders pattern. So you can see there's a left shoulder, there's a head here, and now a right shoulder is formed. And now it just remains to be seen whether the neckline will get smashed. And if it does get smashed, we are going to get smashed down to perhaps this head is about let's say about 1600 points. So, I mean, we could be looking at some 23,000 target if this were to happen. That is the conventional sort of outcome of a head and shoulders pattern. A lot of times, head and shoulders patterns fail also. But if you were to see the probability is that we are going down. We'll be very lucky to escape this. So, the market is suggesting a cool off in the month of October. Um, Maybe we will cool off till Diwali, and then we start a new leg up, perhaps, or we will have not such a bright Diwali. We will soon find out. But this entire thing, if you appreciate charts, you will be able to see that this bounce from this severe fall could not even cover, this average actually. And while there was this 1 day move, which uh, actually this 1 day move also up did not close above a 2 day high. So as you recall, I do look for a 2 day high in terms of at least a first glimpse of a new leg starting up. That has not happened since this was falling. So it does seem like a correction is underway. If we are able to avert it at this level, that will be fantastic actually. Let's see what happens in the coming days. A Nifty Next 50 also fell through the roof after 6 sessions of dilly-dallying at this level. It just slammed down at minus 2.23%. So it was like a waterfall kind of thing. Again, in mid caps, 1.66% it is, and it went down and covered this gap that we had here. And small caps also collapsed 1.4%, though still I would say small caps looking much better than large caps. But if large caps will continue to go into that pattern, small caps will not be spared. That is my sort of gut feel. All this is just gut feel. There's no forecasting that is possible. Bank Nifty not able to clear the average, just collapsing from there. Bank Nifty is still making that right shoulder, so Bank Nifty is still lagging on that front, but down 0.99%. So reasonably weak. Advanced decline also showing you the same uh, outcome, 428 declines to just 70 advances. So the no stock was really wanting to go up. FII's selling continues, 3,400 crores of selling. DIIs continue to buy somewhat less than what was getting sold, so 2,200 crores of buying here. Heat map all red. Infosys tried its best along with State Bank of India and Tech Mahindra to hold up, but Bajaj Auto down 12.9%. So Bajaj Auto actually leading the whole thesis that the auto inventory that has been piling up. Uh, unless we have a great festive season, I think auto, what they call Motown is in some sort of a short-term risk. Ultra Semco, Mahindra and Mahindra, Nestle of all counters 3.3%. See, when you are sitting on such hefty valuations, or everybody is up to their gills in terms of over ownership of these stocks, then any small bad news is bad news, is real big bad news. So this bad news that has been percolating since last evening, that rural consumption is circumspect now because two wheelers are not selling, FMCG is not having that kind of volume growth. So that has collapsed this entire thing today. That it doesn't seem like economy is doing as good as it was meant to be right now, and hence some correction. The HDFC Bank of course falls on every uh, first potential of fall, and it did 1.57% on that. Axis Bank also fell 1.8%, ICICI Bank 0.96%. So nowhere to really hide. Bharti Airtel down 1.89%. Everything was coming down, and except a couple of stocks in IT and Reliance. Nifty Next 50 completely a red sea, washed out. Lodha, DLF, Adani Power, Siemens, Varun Beverages, Vedanta, HAL, Torrent Pharma, BHEL, Bosch, Havells down 7%. My God. I mean, just a complete wipeout of Nifty Next 50 as well. Sectoral trends all red except IT. IT uh, sort of being the defensive today, 1.2% on IT. Real estate down 3.8%, so it has wiped out whatever it had gained during the week. There were nice gains on it for last 1 week, and today they have all been wiped out. Autos down 3.5% in a single day. That's a big cut, 5.8% in this week itself. Consumption stocks down 2.4%. That is also a big cut. FMCG down 1.6%. So suddenly now the defensives of the market are are coming off. Pharma also coming off at 0.9%. And really, this last 1 week, only IT has sustained in green. Everything else is in the red. IT stocks, you can see the IT index is continuously making new highs, perhaps on the back of new highs in the American market, or the tech stocks there doing well. Emphasis doing really well at 5.8% on that. Karur Vysya Bank is the one which stood out today. 1 day gain of 6.18% in such a mayhem kind of a market, and over a longer period also it is continuously making new highs. So Karur Vysya is one stock where the strength is visible in terms of relative strength versus other banks. SEBI's brand new asset class for you. So this is the topic for the detailed discussion today. So we all know about mutual funds, where you can start even with 500 rupees a month, or even lesser if you like. And then there is this, the PMS and the AIF group, where, minimum 50 lakhs for a PMS you require. And somebody has spare 50 lakhs, probably, they would have a portfolio of a few crores. Then only then they will possibly give 50 lakhs to one manager, for instance. Or AIFs where the minimum entry price is 1 crore. So you probably have to be multimillionaire to be a AIF investor. So very, very small market for PMS and AIFs, because people don't have that kind of money. I mean, let's face that. So there is a big gap in the market between the mutual funds, where anybody can enter, and these fancy products where you need to be at least a crorepati to really go there. So what is this new asset class? This new asset class, as mentioned in by SEBI in their recent meeting outcome, is that it focuses on strategy, unlike the plain vanilla mutual fund category. So these will be strategies run by asset management companies, which will not just be less large cap mutual fund or mid cap mutual fund and things like that. It will be complex. It can be complex strategies. So it can be large cap long, Nifty futures short, or something like that, or inverse ETFs they can create. They can have a Nifty inverse 2x ETF. So every time Nifty goes up 1%, that strategy may go down 2%, or every time Nifty goes down 1%, that strategy may go up 2%, something like that. So this is very popular in the US, etc. Strategy based ETF, strategy based mutual funds, and this is the new sort of asset class that may come around very soon. So what are the benefits of this? The benefits are, these are more options for serious investors. So there may be investors who don't want to just have plain vanilla mutual fund exposure. Let's say you want something better, but I don't have 50 lakh rupees or 1 crore rupees. So I need to have some product in the middle. So ideal for those wanting more from investments without the PMS level commitment. Then in terms of risk adjusted returns, long and short strategies possibly can have a better balance uh, of risk, and maybe can hedge against drawdowns. If you have something three sectors long and two sectors short, maybe that will be you may have better risk adjusted returns, even though you may not outperform in any big way. Then, of course, better liquidity and flexibility. So, these funds will be listed on the exchange, so you'll always have 1 day of liquidity in terms of any time you can do that. Many times there are a lot of lock-ins in structured products, and those may not be there here. And there are lower entry barriers. So typically 10 lakhs to 50 lakhs is that category which SEBI says that should be looking at these new products, which is of course more accessible than minimum 50 lakhs of PMS or minimum 1 crore of AIF, so on and so forth. The downsides here are uh, higher expense ratios. So there's more active management. There are strategies that are being pursued. So more churn is there. There likely to be more fees because I mean managers may like to charge more if they are going to give you some more sophisticated product. At least on the face of it, it sounds sophisticated. So they will be able to charge you more. There is more complexity in the product. So understanding the product itself for a layperson, even if he has the money, uh, may be difficult. So it may require more education from the provider in terms of trying to make you understand what they're doing, if they will go that way. And of course, performance uncertainty will remain because, uh, as we have seen globally, I mean, all kinds of hedge funds are there. More than 80% don't outperform the market. So while very fancy strategies can be made, for those strategies to beat the market is the main thing, uh, on a risk adjusted basis also. So just creating complex strategies, and we've seen all that, complex structures of many kinds, whether in secondary market or in the primary market also, or in unlisted markets also. All those kind of structures, your money is saved even if Nifty falls, or 2x of whatever the market will make above a certain level. All those kind of structuring is available today also. Most of the time it doesn't work because there is no free lunch. I mean, unless you have a strategy which can generate some real alpha at some point, it is basically a fee collection mechanism, more or less. So should you consider these new asset classes as and when they come? Definitely you should consider. It's promising. But one thing you must keep in mind is that even if it is marketed or touted as more sophisticated or likely to be higher return, there is no guarantee of any return or I mean betterment of performance. So it is just another choice that you will have in pursuit of better outcomes. Of course, there is no history, there is no track record. So that is sort of a leap into a blind alley, for at least to start with. So users with 10 to 50 lakhs of capital, I mean, is there any attractive alternate that is already present? I mean, why would you want to go where nobody has gone before so far? I'm remembering Star Trek right now. So, we already have small cases in our ecosystem. I mean, they've been around for almost 8 or 9 years now. Weekend investing itself has been around for 7+ years. And I think most of the small cases are doing a fairly good job. So, if you have 5 lakhs to 30 lakhs or even 25 lakhs to 1 crore in the HNI strategies, all these strategies can cater to your demands very well. You know what is the outcome of the last many years and how things are run. So there is no new animal to really tackle, or some you can say unexpected things to happen. So from that point of view, I think small cases in general, not just weekend investing in general, are still undiscovered. You may be savvy investors to know about it, but there are crores of investors out there who have never heard of small case or weekend investing. So there is this huge gap that is yet to be crossed for a lot of folks in terms of understanding what all is available for them in the markets. And of course, some of these new asset class options may also turn out to be well. I'm pretty sure about that. So do let me know your thoughts on how this is going to take place in your view. Mind you, several of these will be leveraged plays. So there will be futures and options also used in these strategies. Sometimes I feel that we unnecessarily try to complicate things for better outcomes. But in just my view, simple things can do really well. So why complicate our life with complexity? Thank you. Bye.